In this video, we're going to talk about what the FHA loan is, how to use it properly, and why it is awesome. I used it for my first loan. Let's dig in. Dave here from Bigger Pockets Money, and we are here to help you achieve financial independence and the life of your dreams. If you get something valuable out of this video, please smash that like button, subscribe, and click the little bell for notifications so that you get notified when we produce more content to help you achieve that financial freedom. Let's dig in. What is the FHA? Well, FHA is the Federal Housing Administration, and the FHA loan is a primary residence mortgage that allows you to purchase a property for down to 3.5% down, right? Up to whatever, 3.5% down or more. It's a great way to get into your first house. Like I said, I bought my first duplex 3.5% down with an FHA loan way back in 2015. And that house hack is a property that I still own, that's still cash flowing, that I'm so glad I purchased. And it really got me started on real estate investing and financial freedom journey. So the FHA loan's just a great way to get started if you don't have a ton of cash for that down payment. The minimum credit score requirement when you do 3.5% down is 580 with the FHA loan, but you can do down to 500 with 10% down. Now, that being said, lenders will probably have their own overlays, and there are going to be lenders out there who tell you, nope, sorry, 500 is too low for us. It is what it is. Now, the benchmark for DTI is 43% with the FHA loan, but lenders will cut you off at 50%, right? You're not going to be able to go above that benchmark with the FHA loan. So your debt to income ratio on this can be a limiting factor, even if you're doing a house hack. Even though you can use 75% of the gross revenue from those units that you're not living in, it can get a little tricky to qualify for those more expensive multifamily properties with such a low down payment. All right, so mortgage insurance premium and private mortgage insurance. So whenever you buy a house, you're going to be stuck paying this if you don't pay 20%, right? So on any conventional mortgage or FHA loan, if you don't pay the 20% down, you're going to be paying MIP PMI. And so that's 1.75% up front. And then that's the MIP. And the PMI can be anywhere from 0.55% to 1.2% for a minimum of 5 years. Now it's going to depend on your equity. You can get out of it once you get down below or above a certain amount of equity. But for prime example, on my duplex, the purchase price was $79,800 and the PMI was about $81 a month, right? So you can kind of scale that out. If you bought a $200,000 duplex, you're probably looking at $150 to $200 a month in PMI. So it can get costly pretty quickly. So in some situations here, if you have the money to put down, it actually makes more sense because it'll lower your payment and cash flow depending on your purchase price. There are not cash reserve requirements on your first use. There may be cash reserve requirements for some lenders, so that can vary. You may need to hold some cash in reserve depending on how strong your finances are with the FHA loan. Now, some of the issues with the FHA loan kind of come down to inspections, right? So they can be strict on inspections. It's just like any other primary residence mortgage. They want to ensure that it's a house that you're able to move into right away. The FHA loan is just sometimes not seen as the most secure purchasing loan in a seller's market, right? Now, in a buyer's market, it's great, and it can still be utilized in a seller's market. It's just that there are more competitive options out there when people are paying cash or 20% down conventional. The FHA may look like you're presenting a weaker offer, so that is a downside. Now, I just want to pivot real quickly and touch briefly on the FHA 203K loan, because I think this is like the crown jewel of why the FHA is awesome. So the 203K loan is a renovation loan. So this means you could buy a fixer-upper house, have somebody renovate it, move in, you get all the equity out of that, and you didn't have to pay for it, right? Because that 3.5% down is of the total purchase and renovation budget. And so you're able to, let's say you bought a house for $150,000 that needs $50,000 worth of work. So you're all in for 200 grand. Your down payment could be 7%. And you're in, right? Now you have to have an approved contractor to do it. It's not a do-it-yourself loan for live-in flips, so that's kind of a downside, but they got to be quick, they get through it. But let's say if maybe because of all the updates you did, now it's worth $250,000. So you just walked into $50,000 worth of equity with 3.5% down. That is really cool. Now there's two versions of this. There's a limited 203K loan and a standard 203K loan. And I got some notes, so I'm going to kind of just make sure that I'm hitting all my points here. So the purchase price limits are the same for the FHA loan and the FHA 203K loan, right? For the limited, there's no minimum to the repairs. For the standard, it has to be at least $5,000 in repairs that you're doing to the house. Now for the limited, it's up to $35,000 and with a buffer of 15% of the total bids. So basically, if you had a $20,000 budget, they would add 15% to that. So 3,000, so 23,000. Now, if when they add that 15, you go over the 35,000, then that's not going to work. Now, the standard is up to the FHA county loan limit, which those vary based on where you live and every year. But basically with that, it says, hey, if the loan limit's $500,000, then you can go all the way up to $500,000 with your total all-in price. With the limited, you can do kitchen and bathroom remodels, appliances, carpet, flooring, roofing, painting, repairing, energy efficient improvements, and a little bit more, right? With the standard, it's you can even do structural alterations, convert a one family to a 2, 3, 4 unit, some larger landscaping projects, improve accessibility, and move the house to a different site, right? So basically, if you're doing just like cosmetic touch-up, the limited is probably fine. If you're wanting to do like a gut or a rezone or any kind of big project, you're gonna need to use the standard 203K loan. Okay, so why you would choose the limited over the standard is just that more lenders offer the limited FHA 203K. As far as the standard goes, if your budget's over $35,000 in repairs, you're gonna need to go standard, or if you're doing any kind of structural or major updates. Long story short here, the FHA loan and the 203K product under the FHA loan are great ways to get started in real estate investing. I used the FHA to buy my duplex. I was able to move in, live for just about free. I think it was coming out of pocket like $100, $130 a month. Then when I moved out, that property has cash flowed ever since. So like 6 years, 7 years now of cash flowing. It's also appraised last year at 140. And so my original 79.8 that I paid for it, I was able to pull out $20,000, $30,000, still have more equity than when I originally bought the place, all around winning. And so I definitely like the FHA loan. Now, I will say that as with any kind of investing in real estate or buying a house, you should buy as an investment rather than just a house for yourself. I definitely like the house hack option of a 2, 3, 4 unit so that you're not paying your entire mortgage and you can really jumpstart your journey to financial freedom and have some cash reserves. If you only have $3,500 to close a $100,000 house, you're gonna be eaten alive if you have a water heater go out or HVAC with closing costs, which is normally like 1 to 3% of the purchase price, right? So just make sure you have $5,000 or $10,000 or enough of a buffer saved so that if something goes out in the first year or two, you can pay for it. It's not gonna make break the bank, and you're gonna be successful. Now, all that being said, hope you got something out of this video. We at Bigger Pockets Money are here to help you achieve financial freedom. Make sure you like and subscribe and follow along so that we can help you reach your goals.